Good afternoon, everyone. On behalf of Equirus Securities, I welcome you all on third quarter FY22 result conference call of Rolex Rings. From management side, we have MD Mr. Manish Medeka and CFO Mr. Hiren Doshi. So without further ado, I hand over the call to Mr. Hiren Doshi for initial remarks, post which we can open up for Q&A. Over to you, Hiren bhai.
Thank you, Ashutosh. Good afternoon, ladies and gentlemen. My screen is visible, right? Can you please confirm, Ashutosh?
Yeah, it's visible.
Okay. Thank you very much for joining this post-earning Q3 call. As you must have seen our quarterly numbers, what we have uploaded yesterday, what has been approved by the board and the audit committee. Would like to take you through the certain glimpses of that. First of all, as you people are aware that in March 21, we had a gross revenue of 620 crore. Against that, in this 9 months only, we have reached the revenue 733 crore, which is straight away 18% growth compared to last annual number. When we are comparing the last 9-month number with the current 9-month number, the growth is somewhere about 80%, what the numbers are telling. That is no doubt in December 29 months, we had a 1 quarter of this COVID also. So obviously that would be there. But we would like to inform the investors that our growth would be in continue. It would be there in momentum. We had a quite good jump in last couple of months, wherein the average revenue is 100 crore, what we have already recorded. And we expect the same in the Q4 also. Q4, as I've already considered January 2022, when I was telling the 100 crore average of last 2 months, that is December and January. We expect the same kind of growth in the Q4, and we are also aspiring that we would be touching the estimates what it has been communicated, and we would be surpassing 1000 crore mark in this current fiscal. Again, with the same EBITDA consistently, it would be 22.5 to 23.5% of range. That would like to take you through the certain numbers. As I was mentioning that in Q3, we recorded 243 crore gross revenue vis-a-vis 259 crore in Q2. The EBITDA, what we had 22.4%, it has a bit dip in quarter 3 FY22, which was 21.7. The PBT, what we had is 456 in quarter 2, whereas in quarter 3 it is 439, down by 1.5 odd crore something. At the same time, the PAT what we had is 33 crore in Q2, and it has gone to almost 30 crore in Q3. The products bearing and auto component business, it is almost 60-40 what we had, and same way in exports, again the 60-40 ratio is going there, and we expect the current fiscal would be ended with this proportion only. Apart from that, I would like to tell you that in the last January, that is January 22, we had a revenue of 102 crore. That is the first time in the history of the company. And we also witnessed that in the next 2 months, we do have a good order book, and the same would be catered in the next 2 months. Apart from that, we had a development in terms of a couple of new customers. One is from USA into the bearing ring segment, and another one is from Europe, is from auto components business. Again, those are global multinationals. The supply to these multinationals would be initiated in the second half of the next fiscal, maybe in the Q3 in the next fiscal, and it would be ramp up almost to double in the FY24. Apart from one existing customer, who is having a plant at Europe, which is not in our product customer basket as of now, they have also awarded a certain program which they were catering from certain Indian supplier. Now it has been transferred to Rolex, and again in Q3 of next fiscal it would be started, and in FY24 it would be fully ramp up. So we envisage that almost 100 odd crore revenue in FY24 would be from these 3 customers only. Apart from that, the substantial development, that is the solar power project, which is we are in process. We have already installed 4 megawatt on the ground mount. It has ready to generate the power. Only the thing we are just approaching and getting the final consent and approval and connectivity of those to the substation and certain consents from the government. Besides that, another 10 to 12 megawatt ground mounted solar would be commissioned and installed, and we expect power supply from July 22 onwards. Would like to brief you the product mix, the customer industries where we are catering in last 3 years, and in this 9 months, as you people are just checking that almost 40% of our business that comes from the passenger vehicle. And when I say passenger vehicle, that is not only the car, it is a kind of station wagon vehicle also, which is a combined or rather the common vehicle for the cargo as well as passenger. So our revenue comes almost 40% from that segment. Apart from that, another main segment, that is industrial applications, wherein the windmill, railways and other high volume components are being consumed, which is almost 30% averaging in last 4 years on our contribution to our revenue. The another main segment is commercial vehicle and heavy commercial vehicle, which is almost 25% in this current 9 months. Prior to that, it was somewhere about 27% average in last 3 fiscal. The main one thing that in the electric vehicle and a hybrid kind of vehicle, we have already initiated our supply in this current fiscal, and we expect that by end of this current year, we would be somewhere about 7.5 to 8% of our overall revenue into electric vehicle and hybrid model kind of thing. At present, it is 7%. The revenue bifurcation as far as domestic and exports, it has been given what already communicated, updated with 9-month number. EBITDA, the 9-month consolidated EBITDA, we have already touched 23%. We expect to be continue the same in the next quarter and even in the next fiscal also. The PBT PAT, it is just because of certain 1 odd million of the deferred tax reversal which was there in the last quarter. It's not there in this quarter because of certain capex what we did. So obviously the deferred tax reversal is a liability has been created. The operating cash flow, again, a very sufficient and quite comfortable to the company. Would like to inform the investors that company has repaid entire long-term debt, what it was there in the CDR. Apart from that, a marginal debt what company has raised in March 21 and April 21, which was a COVID loan amounting to 28 crore. Out of that also company has started making repayment, and today it is 27 crore, and we are targeting maybe in next 12 to 18 months to move off this debt also. Our main target, couple of growth strategy, or what you say our key addressable area is first of all no debt, zero debt company, and even the maximum capacity utilization what we are able to do. The working capital, my debt equity, the major chunk of this thing is working capital only, which was somewhere about 175 crore. The sanction limits were 225 crore, but again we are utilizing 75% of my sanction limit, though it was fully utilized on the lesser number of operations, but in the current segment, current year, it has again reduced to utilize, which is evidencing the good amount of operating cash flow. The return of equity, the ROCE, as it has been addressed, obviously the operations have gone up, margins have gone up, it has increased. The detailed financials, detailed operating numbers, it has been communicated. So now the session is open to the quorum for any question answers.
Thank you, Hiren sir, for that detailed opening remarks. I'll now open the floor for Q&A session. Anyone who has a question can use the raise your hand option. We'll wait for a couple of minutes until the question queue assembles.
Mute on.
Sitter participant છે. પત્રકાર analyst investor પત્રકાર કોઈ.
Yeah, Shin, go ahead. Let's start.
Yeah. So we have our first question from Mr. Mayur. Please unmute your line and ask your question.
Mute off.
Hello, am I audible?
Yeah, you are audible.
Okay, thank you for the opportunity. I just want to ask what is the outlook for the next quarter? Could you please share your thoughts on that?
Yeah.
Volume maximum.
As I was mentioning, that last 2 month average was 100 odd crore, and we expect somewhere about the dispatches of 200 crore in next 2 months. So preferably the dispatches would be 300 crore in the Q4, wherein the revenue booking, because of sales in transit and all this thing, it would be to the extent of 270 odd crore, only the component and scrap I am telling, or in totality it would be 280 crore something what we expect to added in our 9-month number.
Okay, sir. Thank you.
We'd like to remind the participant, in order to ask a question, please use your raise your hand option. We have our next question from Mr. Praveen. Please unmute your line and ask your question.
Yeah, hi team. Thanks for the opportunity. 2 questions from my end. One is, sir, if you can just share the, how much was coming from bearing rings and auto components in same quarter last year? What was our mix in, and also what was our mix on export and domestic front?
See, in the same quarter last year, the bearing ring was somewhere about 65-66%. The auto components was in the range of 34 to 36% in the last quarter, last year's December quarter.
Okay.
Yeah. And what is your next question, sir?
Second is, what is the export and domestic mix?
Domestic export is broadly same, sir. It ranges in between, say, domestic is somewhere about 38 to 42%, and export is 58 to 62%, in the more or less in the same line, sir.
Okay. And so my last question is for next 2 years. So where do you see the growth coming from? Like, what is our order book look like? More into the passenger vehicle, CV, industrial, and you can just throw some light on that front.
See, definitely we expect growth in commercial and industrial applications, wherein almost 60% of my business is there. In the commercial segment, in the industrial applications, railways, infrastructure, as you are witness that infrastructure would be there in our domestic market also. So we expect good turnaround, or rather good demand from there. And we also expect that if the semiconductor chip issue, or rather the availability of semiconductor chips, would be addressed as quickly as possible, then we also expect passenger vehicle penetration also. in the maybe in next 2 quarters.
Okay.
Yeah.
Thanks. That was useful. Just one more, if I can. So where are we in terms of passing on the RM prices?
Sir, as communicated earlier also, as you people are witness that in the current quarter, that is Q3, the raw material pricing has not moved much. But whatever the pricing it was there in the last 2 quarters and the last quarter of last fiscal, we are able to pass it to our customer to the majority of the extent, or you can say near to 100%. But to my overseas customer on a quarterly basis and to my domestic customers on a monthly basis. So we do have a pass-through mechanism as far as commodity pricing is concerned.
Okay. Thanks and all the best.
The next question is from Mr. Sonan. Please unmute your line and ask your question.
Yeah, hi. Good afternoon, sir. Thanks for taking my question. Sir,
Very
just
good
wanted.
afternoon, Sonan.
Yeah, thank you, Hiran bhai. Sir, just want to understand what can you split the product revenues and the other operating income for this quarter?
Q3, you mean to say, right?
Yes.
Yeah. Let me tell you, the bearing ring business is somewhere about 92 crore in this current quarter. That is Q3. I'm talking bearing ring. That is somewhere about 141 crore in this current quarter, and auto component business is 81 crore in the current quarter.
Okay, and then the rest, so this is 220.
My scrap revenue is somewhere about 15.5 crore. Export incentives are there, and windmill revenue. These all consist of 242 crores.
Okay, so basically the product revenues are 141 plus 81, right? So that's the 222.
Yes,
and the
223.
Rest,
yes.
And the rest will be the other operating income, mainly the scrap and
Yeah.
other stuff. Got it, sir. And just in terms of like, we have seen some improvement in raw material cost to sales this quarter. So that is more a function of the product mix, or are we now finally seeing that RM costs have peaked and that is also supportive?
See, we would have been it would have been possible for us to pass on the raw material pricing to our customers, but as I told you, it is on a quarterly basis. But again, with a customer, the quarter may not be the October-December quarter or something. With the few customer, they are operating, Feb to Jan year. So accordingly, the pricing would be changing. Certain pricing, it has changed in January. Certain, it has changed in November, like that. And we expect now the raw material pricing would not be increasing. And I think it is being stabilized.
Got it, sir. Got it. And I'm just trying to understand, like, this quarter also, like you said, in December, you had 100 crore run rate. And then January, and I mean, for the whole of this fourth quarter, you're expecting that the production run rate will be around 100 crores. So just trying to understand, like, the transit effect should have been there even this quarter. And then, so doesn't that compensate? I mean, why aren't we seeing the full 300 crores coming in fourth quarter?
See, definitely that 300, because, in the month of March, so as far as the sales transit is concerned, what we are expecting, March would be closing somewhere about 105 or 100, in between 105 to 110. But my sales in transit, when we are comparing annual number, something what it was there in April 21 was 65 crore only. And if you see in my December, it is almost touching 100 crore. So we expect additionally or conservatively, as I told you, that 10 to 15 crore additional sales in transit by end of March 22, or rather in the Q4. So that is why I told that somewhere about 275 odd crore revenue would be added in my 9 months number, which is 728 crore.
Got it. So you still see that the
Yes, Yes,
increase
because
in
the transit and the congestion at overseas port at USA and this thing, that's why it has prolonged certain supply. So unfortunately, we had that impact.
Okay. And just last clarification, I think, so product mix, you mentioned PVs are 40%, right? Passenger vehicle.
Yeah, passenger vehicle, all passenger vehicle segment, as I told you, it would be a couple of our customers based at USA, wherein the components what we are supplying, they are using on a simple 4 passenger vehicle car also, and a car of a kind where they are using commercial as well as passenger use both. So it is a mix of that. So all put together, it is somewhere about 40 odd percentage in a passenger vehicle segment.
Got it, sir. Okay, sir. Great. Thank you so much for taking the question.
Yeah, thank you.
So we have our next question from Mr. Miyush. Please unmute your line and ask your question.
Hi, thanks for giving me this opportunity. Sir, I just wanted to understand the margin profile for domestic and exports business, is it any different or we have similar margins?
Not substantial difference, but as we indicated earlier also, wherever the product is having multiple processes, critical operations, obviously the margins would be on a better side. Whether that those products are being supplied to domestic customer or overseas customer, it doesn't make much change. Maybe in the overseas business we have a marginal benefit of export incentives and so. But wherever the product value additions, operations are there, the margins are there.
Okay. And so these contracts are the pricing of these products. Do you have a specific margin percentage in mind, or it's like profit per kg or profit per EBITDA per kg? How do you generally look around pricing for these products?
Yes. It is a combination of overall EBITDA percentage as well as the kind of, there are certain processes what we are doing in our manufacturing or rather on our component. There are 5-7 different processes. Even each process is also having some kind of benchmark that I should be having minimum this much conversion on per kg basis for this process, like that. So accordingly it would be built up, and at the end it would be at beyond or rather at least matching to a certain percentage of EBITDA. So it's a kind of mixture of both these things.
Okay, that's helpful. So in that sense, in the last 1.5 years, we've seen commodity prices go up substantially, and to that extent, we've still managed our margins in the 20 plus range. So does it mean that when steel prices and commodity prices start correcting, we also will get impacted because of it, because our margins will be in the same range and our realization will start coming down?
Not much, sir, not much. As I told you that it is not because of my inflation, the margin has not just simply my revenue price has gone up, that's why. It is something what I am incurring and I am getting passed through from my customers. So whenever, if it is there in the increasing trend, definitely we have certain benefit on my unsold inventory, consignment and so on. But at the downside, which is rarely it got corrected or rarely it happened, but there we didn't have much of the impact because the certain components what it has been already been produced and sold, that would be at the particular price level. So we do not expect much of the downfall if my revenue or rather the commodity price gone down.
Okay. Sir, it's just a suggestion, and maybe as a management you can consider, the presentation is quite elaborate. If you could also include one slide which mentions the volume for the quarter, it will be very helpful for us to understand how the underlying business growth is panning out. It's just a suggestion.
Sure.
Maybe you can consider.
Sure, will do, sir. Sure.
And just one last question from my side. I was just reading a news article suggesting that we have entered into an MOU with Gujarat government for setting up textile parks. Is it correct? And what could be the possible rationale for doing something like that?
Sir, it is very much on primary stage. As you people are aware that we do have a big piece of land in the name of company, wherein if we have such kind of even the announcement or arrangement with the government, where government is going to support by developing of approaching and maybe another necessary facilities like the roads, light, water supply and so on, which will definitely increase the marketability of that land parcel. That is the purpose why it has been, and it has been under the Vibrant Gujarat movement, it has been offered, and very frankly it is very much on a primary stage, and definitely not down the line 3 years or so. We didn't have any kind of plan for such any kind of investment or any kind of these activity apart from our core competence of forging business.
That's not really the right way to look at it, but okay, I'll preserve my comments for myself. But sir, any capex plans, and how do you see, because the balance sheet is improved quite a lot, and given the kind of trajectory we are working with, we would definitely end up with a lot of cash generation. So how do you see capital deployment over the next 3 years?
We do have a capex of maintenance capex, and apart from that, machining line capex and maybe certain furnaces to be installed. So that would be to the extent of 20 odd crore annually. Definitely it would be required, and the much of the big capex what we have already incurred, that is the solar plant. Apart from that, we do not foresee any substantial capex for next 2 to 3 years.
So then how do we look at cash that will get accumulated in the balance sheet?
Yeah, definitely it would have improved my position, as I told you that the certain working capital what I was using prior to 6-8 months back, which was the 100% of my working capital sanction limit, and today I am utilizing 75% of that. So that is the unutilized working capital, or rather the funds have been paid back towards working capital.
Yeah, I understand.
Yes.
But given the kind of numbers that we are talking about, next year we will be generating upwards of 100 crores of free cash flow, right? So
yes.
Are we saying that we will repay the working capital loans as well? And
yes, because as we do not foresee any kind of substantial capex, but if some big opportunity comes to us, then definitely we are going to order for certain equipments wherein the 20-25%, 30% down payment would be required, so that would be used for that purpose. And apart from that, as I told you, we have a marginal long-term debt which is 27 crore. That is also our priority to pay it off, so that my balance sheet would be completely long-term, rather the free from long-term debt.
Fair enough. That's quite useful. Sir, just last question from my side. Any new products that we are currently under development, which can help us get more customers and more sales from the same customer? Anything that you can share about?
See, definitely if you just recall, I was mentioning it on certain on one of my slide that our existing customer who have a plant at Europe, at present they are not in our customer basket, but they would be there. So a kind of maybe a certain change of our existing product what we are supplying to their current plants. So the change in those terms, it is a continuous effort, and our concentration is to just target the EV customers also, wherein how they are developing the new products and what kind of our product, how we are able to cater them. So that is our concern, and we also get good inquiry for the industrial applications and commercial segments side also. So that would be there, but our broad segment, as we told you, that bearing ring and the auto components. But we expect, or rather, we are doing certain things as far as commercial vehicle, commercial segment, heavy commercial vehicle. One of our main customer who are into heavy commercial vehicle or off-highway vehicle, they already gave us a certain 7 or 8 different kind of components, maybe having one value-added process with the current products, and another new product what they are looking for. So that process is going on, and down the line we expect maybe after 1.5 fiscal or so, we would be having those revenue in our basket also.
Thank you. I'll step back in the queue.
Yeah. So we have our next question from Mr. Priya Ranjan. Please unmute your line and ask your question.
Yeah, hi. My question is related to your CDR proceeding. When do you expect to complete all the documentation and get out of CDR, and how soon it's possible? Because that is keeping a lot of restriction on your this limit, that
Yes.
limit.
As I inform you that we have already paid off entire CDR debt, and my CDR period would be over by March 22. We expect the dialogues what we have with our banker that maybe in first quarter or so, they might be initiating the, checking how the things would be there with their higher ups and with the central office. But we expect at least 6 to 9 months to get something from our bankers, because we have 6 nationalized banks. And once it will be, something would be processed at the lead bank, then again it would go to all other member banks. So we expect something in Q2 of next fiscal or maybe in Q3.
Okay, that's all. Thank you.
So we have our next question from Mr. Varun. Please unmute the line and ask your question.
Hi, good morning. Just missed out on that number of auto components and the bearings revenue, and what's the scrap revenue. So could you give the breakup once again?
You are talking for Q3, right?
Yeah, Q3.
The bearing ring revenue is 142 crore. And auto components 81 crores. Scrap is 15.5.
Okay. That's it. Thanks.
So the next question is from Mr. Dhiral. Please unmute your line and ask your question.
Yeah, good afternoon, sir. Thanks for the opportunity. So at the current gross block which we have, what kind of potential revenue, we can deliver?
With the current block and the routine machining lines and that capex, what 20 odd crore, something what I told you, we would be able to touch revenue of somewhere about in between 1600 to 1700 crore.
Okay. And by when we can expect this to achieve? What is your target line?
We expect in FY24-25.
Okay. And sir, in terms of revenue mix between bearing and auto component, which segment do you feel to grow faster?
Sir, we have even in the bearing ring we are expecting, though earlier we expect that auto component would be on with a higher pace, but even in the bearing ring segment, we got the parallel or simultaneously got the same kind of opportunity, and our ratio, or rather our split, would be broadly maybe down the line 2 years it would be 55% of bearing ring, 45 of auto or so.
Okay. And sir, any lever for margin improvement from here on?
Definitely, sir. As I was telling to you that we have installed solar power project, and wherein after 100% installation, which is of 15 to 16 megawatt, and there we expect at least 30% of my current power cost to be reduced, and which will give me definitely a jump in my EBITDA or in my margin.
Okay. And so lastly, on the cash flow side, if I see your cash flow for FY20 and FY20, it was sharply down as compared to previous 3 years. What has led to this fall in the cash flow from operation?
You are comparing FY20 and 21 with the earlier years.
Earlier year, yes, it was in the range of 150 to 180 crore, and we
Yeah,
substantially
because
fall down to.
as you must have seen in FY19, we had the highest revenue of 911 odd crore, and when we had a good amount of cash flow also. And particularly in FY20, the operations have gone down because of overall market recession. Subsequently, the COVID impact came where our operations further gone down. So 911 crore operations came down to 621 crore in FY21. So that the main reason is the reduction in operations. At the same time, we had the repayment of my long-term debt, which we tried to pay off as early as possible, and so on. In FY20, even at the end of the FY20, we have prepaid certain portion of my long-term debt. In FY21 also we have prepaid, and even as of now, the debt which I'm supposed to repay by March 22, we have already paid off before 1.5 months back.
Okay. Thank you so much, sir.
Yeah.
Yeah. So we have our next question from Mr. Nikhil. Please unmute your line and ask your question.
Yeah, thank you for the opportunity. I just wanted to know that
your voice is not audible.
Just a second. Yeah, are you able to hear me?
Yes.
Yeah, okay. So I was just asking, so we are setting up this solar power plant to 4 megawatt right now and then another 12 megawatt. So with that, what would be the cost savings that we would be able to achieve? And then how much we would be self-reliant on with this 16 megawatt solar power plant? So what we would be able to do on our own?
Sorry, can you just come again for the last line? What you asked?
No, so I was saying, so with total 16 megawatt solar power plant, so would we be self-sufficient? Not in terms of per se using all the electricity, but basically we'll give it to the grid and get back that 16 megawatts. So how much do we consume is the question.
See, even after installing the 15 to 16 megawatt, it would hardly, give me somewhere about 35% of my power consumption. So the rest of the things, definitely I'm supposed to continue with the purchase from DISCOM. So whatever the generation would be there, it would be 100% captively consumed at our end.
Okay.
Yeah.
And what is the kind of cost saving that we may have actually?
We are expecting broadly somewhere about 90 odd lakhs per megawatt per year.
Okay. So that was question one. Second was just I wanted to understand what is the capacity utilization in this quarter?
This quarter, it is somewhere about 56% of my utilization. And by end of even in the next in the Q4, it would be touching to 58-59%. Over broadly, it would be 57-58% by end of this current fiscal.
Okay, fair enough. So that's all from my side. Thank you.
Mute on. Mute off.
Yeah. So we have our next question from Mr. Miyush. Please unmute your line and ask your question.
Sir, I'm sorry, just to clarify, you mentioned 90 lakh rupees per month per megawatt. Is that correct?
Per annum, not per month, sir.
Okay. Yes. Thank you.
I'd like to remind the participant, in order to ask a question, please use raise your hand option.
Actually, I'll take up a question.
Yes.
Yeah. So Manish bhai and Hiren bhai, we basically discovered this 100 crore peak revenue order from 3 customers in FY24. Can you throw some light, like in terms of end users of these products, and and also if you can throw some light that where do you see maybe next 6 months or 9 months new order booking to happen? Which areas we are targeting or in discussion with customers?
See, like you asked about the end customer.
Not end customer, but end users of these products, these orders. You need not name the customer, but end users.
The end user is basically bearing for bearing races and auto component for gearbox. Then now we make generation 3 bearing. So it is a kind of hub and bearing combination. So in that segment, we are expecting a very good opportunity from, like, there is one Korean company in Pune. They are making generation 3, and we are their 60% supplier, and they are also increasing their volume. So in our case, even if we expand in bearing, then also we don't see any threat in competition and gearbox. See, 2 or 3 more customers we are adding for gearbox also, and one customer from US, they are making only industrial bearing, and we have already started getting their sample order, and that business within 2 years we are expecting more than 80-90 crore annually. So this way.
Okay, so basically this is an industrial bearing order, the new order that.
Yes.
And in domestic market, how do you see the traction in the industrial bearing rings? Are you seeing the volumes over there increasing in terms of whatever schedule we are getting from customers?
Mainly 2 or 3 customers. See, there are 2-3 plant multinational company in India. They make only industrial bearing in their new facility. So their range is for large diameters like windmill, railway, then steel plant, earth moving equipment. So there we have already started. One of our customers, we are the 60% supplier in India. Other 2 customers are expanding their capacity, or they are they have reached to their capacity. So they are trying to reach to their capacity. There also we have already entered in that business. So in India, we are expecting more industrial bearing products and import substitute. They are closing their foreign facilities and they are moving their equipment in India.
Okay, got it. That's all from my side. Thank you.
So if you have a question from Mr. Nikhil, please unmute your line and ask your question.
Yeah, sure. Thanks for the opportunity again. So just wanted to check, let's say on the EBITDA margin side, so blended margins is, let's say, in the range of around 22-23%. But if I divide it into the auto components and bearing, so what may be the split or what may be the margins individually in bearing components and auto components?
Sir, as I already replied in other query also, see, whether it is bearing ring or auto component, wherever the value-added processes are there, wherever the much critical operations are there, obviously the EBITDA or the margins are on a higher side. But generally, even on a plain bearing, which we are producing for last about 25-30 years kind of thing, which is a continuous kind of requirement, where my margins may not be 23%, but I might be getting 20%. But against that, the certain critical bearing rings, what we have started in last 2 years, supplying to a couple of US suppliers, where we would be having a margin of more than 25% and so. But in auto components, again, broadly, it ranges between 22 to 25% of EBITDA margin.
So I would say then pretty much similar, right? For between both the components. Let's say in the range of.
Even in the bearing rings, we have certain value-added processes and operations which I am supposed to do. So there we are getting equivalent margin compared to auto components also.
Okay, sure. So that's all from my side. Thank you.
So I can see Miyush has a question. Please unmute your line and ask your question.
No, sorry, I'm done. I forgot to unraise my hand. Sorry.
Yeah. So anyone, if anyone has a question, please use the raise your hand option. We have a question from Mr. Harish. Please unmute your line and ask your question.
Hi, sir. With better utilization, now with your utilization less than 60% in 2 years, presuming it should be much better. So in that context, how should one think about margins?
Definitely, once we even touch 70%, more than 70-75% at utilization, we expect improved margin also. But conservatively, as we are telling you, it would be in the range of 23%. But we expect to be better once we have a better utilization.
Okay. And any cost saving programs that are ongoing at this point in time, which you see benefits in the next couple of years?
Yeah. One is the thing, as I told you, as far as my reduction of power cost is concerned. Apart from that, it's a continuous effort what we are putting on our production floor to get the most scientific base of production and to get the maximum yield of our input. So that is a continuous process, but at the same time we are developing new components wherein the trial and runs are required. So there may be initially it would be on a higher side, later part it would be covered. So it's a mix wherever certain in our other production items we might be saving. At the same time we are developing these new components wherein the trial runs and the couple of rounds, 3 rounds, 4 rounds of initial batches it's supposed to be produced.
Okay, and the incremental, contracts, incremental customers, are these at in terms of working capital, profitability, are these similar, better? How are thinking about that?
Definitely, this is in a competitive environment. Now it's open to the world, and we have to have a optimum margin. And our priority is always to get the customer, to tap the customer, subject to the minimum EBITDA level, and to that extent we negotiate with our customer. But our always priority is to utilize my capacity on spared capacity, which will help me to give my better return.
Okay. So in fiscal 24, what kind of revenue numbers are you looking at, sir? Ballpark? With the new customer, some of the customers, not a precise number, but more like a range that you're looking at.
Definitely in fiscal 24, it would be in the range of somewhere about 1400 to 1500 crore.
Understood. Okay. That helps. Thanks so much. Have a nice day. Bye.
Yeah. So question from Mr. Sachin. Please unmute your line and ask your question.
Hi, sir. So my question was regarding the offerings for EV and hybrid. So can you see what we are offerings for them and how different would be it from the normal bearing? So how it's different processes, what are the value addition we do for them, and how is the margin in that regard in EV and hybrid?
See, we are offering them a bearing rings, what we are generally offering to other players.
In hybrid and EV, the components, they require more precision, so there is a more value add. So definitely there is a more profit in the hybrid and EV component. And like we have one customer, from next year that revenue will be more than 98 crore, 95 crore. That component require very precision, some dimension. And additional operation also. So definitely there is a more margin in hybrid and electric component.
Okay, so value addition is in terms of process, but not material, like ceramic.
Yeah, it is in terms of process, not in terms of material.
So okay. So there is no specific ceramic bearings being used instead of other steel bearings, not that type of things which is.
No.
And saying just for clarity purposes, you have said that 40% comes from PV. Can you say within bearings how would be the contribution from PV and CV and industrial for pure bearing rings?
Within bearing rings, we can say 60% is from PV and that segment, and 40% is there in industrial and other applications.
Okay. So the CV related is largely on the auto component side, not on the ring side.
Yes. It's CV that is commercial, off highway, HCV, and it would be there in majority in auto components.
Sure. Thanks. That's it from my side. Thank you.
Okay. I think that was the last question. I thank management and participant for joining this call. Over to you, Hiren bhai, for any closing comment.
Yes. Thank you very much to all of the participants and Equirus team to arranging investor call. And as our investors are supporting, we always work hard on creating wealth for our investors, and it would be our endeavor and the first priority of the actions. And we expect a growth subject to we will not have any kind of COVID impact now, and maybe we expect that the semiconductor chip issue would be addressed, so that we would be having a quite or rather rapidly increase our utilization and get the good business. We look forward for your continuous support. Thank you very much for attending. Thank you very much.